Hello, this is the Chart Profit video, Friday 23rd of June, less than an hour into the trading day. This from the pre-open today. We're looking at the E-mini S&P. Enough time was spent at 24.32, which is here, on Thursday to migrate the 2-month point of control to that level. Price relative to this level will give an indication of strength and weakness in the short term. We had aggressive selling marked above that level on Tuesday, actually when the point of control was at 24.34.50 here, and as I said at the time, in the longer time frame, this activity, this selling, aggressive selling, can be considered reactive because Tuesday's value area here was printed entirely above that level. So we've seen a small shift in the point of control, and as I say, it's now at 24.32. We see aggressive selling on the day frame. That's red at bottom again, marked below that level. That would be a first sign of weakness. On the breadth chart here through Thursday for New York, these bottom two breadth indicators are close to their levels but just above them at the moment. These two breadth indicators are giving us continuation of this green bar for breadth here in the middle. Price trend is defined by the price oscillator at the bottom here above zero, so the daily trend is still up, but as you can see the momentum is heading lower. So on the daily time frame we have an uptrend that is slowing. We need to see this indicator remain green above zero and turn back up. And we need to see this level on the E-mini S&P 24.32 hold. Currently here on the live chart, this is a 30-minute bar chart of the E-mini. You can see this level here at 24.32 has attracted a lot of time over the last few days. That is now our 2-month point of control and a reasonably significant level. Looks like the E-mini is just finding that level attractive. A higher low entirely above that level would be a positive. Quick look at the sentiment indicators. My version of the Ridex assets ratio came in yesterday at 11.3. Been creeping up a little over the last few days. We have this peak level up here at 14. We only hit that twice in the database. If the market pushes higher, would be supportive to see this ratio staying relatively low. Just zoom in a little bit there on the ratio. You can see here 11.3 on Thursday, and here's that previous peak up around 14, which came in on March the 1st. Once again, it's interesting to note that over the last few days, we're looking here at the bear fund assets in isolation. They've fallen. This is an extreme low in bear fund assets back over here on the 1st of March. We're approaching that level. But interesting that the bull fund assets, again here in isolation, have also fallen. So if we look at total assets here, you can see that participation, we could call it, is lower at the moment. And if we look at these levels reached late last year, we're quite a bit below that. Looking at the public poll from AAII, bulls percent this week was almost unchanged at 32.7%. 5 weeks ago, it's over here on the chart, the bulls percent fell to 23.9%. That was the lowest since November, when the market made a low here. If we look in the investors intelligence poll, bulls percent this week was higher at 51.5. Previous week's reading at 50%, that was an 11-week low. Remembering these are contrarian indicators. 3 weeks ago, bears percent reached 19.2%, that was a 22-week high. Again, you'll note that back in early March, we had a kind of sentiment peak here as well, indicated by this poll. And Lipper US fund flows, they reported equity fund, including ETF outflows this week of 2.2 billion. It's not a particularly large outflow for a single week. Obviously 5 weeks ago there was a larger outflow that we've now lost on this 4-week flow number, because you can see in black here the 4-week flow number this week is higher. Again, you can see late February, early March, this indicator peaked here. Let's review the major charts. We're looking at the spider here. The 2-month point of control is at 243.40. I'd say this is a key level, a key chart right now. And you can see that currently printing just below that level. Certainly need to see spider printing back above that point. A higher low would be a positive. Small caps have relatively performed better recently after going through a period where they were lagging. The important level It's a 16-month point of control at 136, and we're currently printing way above that. A lot of talk recently about the technology stocks, especially this sell-off here, which is quite violent earlier in the month. Had a retracement back to that halfway point off the high. Always mark that off a high. Looking for a higher low above that level. That would be a positive. This natural resistance can often turn the first rally back down. So let's hope we see some price and time being printed above that level. This is T-bonds TLT. We've discussed the support down here, this sort of double bottom on this major, what was the major point of control at the time, 117.15. Major migrated higher at this point to 119, and then we had a higher low above that level. And on the minor time frame, the 8-month went to 121.63, and we had a higher low there. So this is still a bullish looking chart, possibly getting a little overbought here. First level of resistance, to my way of thinking, comes in at this halfway point off last year's high, up around 130. GLD, the gold ETF, a little higher at the end of this week, and approaching the major at 119.84, major resistance. If we could see some time being printed above this level, a high or low, would put the chart back into a really strong price location. But currently, again, this is a level of clear resistance on this chart, 119.84. Key chart at the moment is oil. This is the United States Oil Fund, USO, and for a few weeks now we've been saying this is a key chart because of the weak price location. We saw the major migrate to 1144 in here somewhere, and then we had a lower high below that level. We saw the 4-month migrate down to here, 1028, about this point, and then we dip back underneath it. So this is really weak price location. Just looking at the halfway point off this important low back over here in 2016. Printing below that, we're obviously a bit oversold at the moment, maybe a bit of a bounce, but unless price can get back above 1028, and assuming that the point of control doesn't migrate, I say this is a weak chart, and I think a key chart. It's the dollar index we've been saying since late March, early April, when we saw a rejected probe of the 6-month up here, that this is a weak looking chart. I think it's still a weak looking chart. There is big support down here at 95.57. Currently just seeing a series of lower lows and lower highs on the chart. As I've said, this is an attractive level, so I'm a bit wary of this chart at the moment. We're 1 year on exactly from the Brexit over here, June 23rd, 24th. Across this period here and this oscillation over the long term, we saw the 15-month point of control settle at 124.78, so there's big support here on this chart. As I showed in last week's video, from this point there's a distribution here, but the value area high came in at this point here, just above 130. And unless that point of control for that distribution migrates, this remains, this level up around 130 could be resistance. Just be interesting to see if and when that controlling price does in fact move. If it doesn't, price relative to this level really important. So I say in the longer term, the pound dollar still in a very strong price location. Euro FX chart, the euro has been stronger recently, up off this lower high on the 7-month, but we have here major resistance at 113.29. Previously resisted the chart over here. If we see price printing time above that level, we'll put the euro, put this chart in a really strong price location. Finally, the dollar yen, interesting chart. This is the one chart where we've seen a migration this week. The 12-month controlling price has moved to 111.30. We're currently printing exactly at that level, but a little bit of time this week has shifted the 12 months to that point. We'd be looking now for a higher low or a lower high below that level as a clue, re the direction of the market from here. Often on a chart like this, if you see a migration like this to a new level, it often precedes a directional move. So look at price relative to that level with interest over the coming days. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.